Hi guys, how are you? Vladimir here from Home Trader Club, and welcome to our Forex Trading Talk podcast. Today, I'm very honored to have here with us Peter Varcoe. Peter, hello.
Hi guys.
Peter is a veteran trader with way more experience than myself, more than 2 decades of real trading experience. He is a mentor. He is an author of an amazing, from my point of view, the absolutely best book on the subject, How to Trade with Technical Patterns. Peter, thank you very much for joining.
You're welcome.
Very, very honored to have you here with us. And I hope the listeners will also enjoy all your insights, all your inputs, and all the amazing things you can contribute to the discussion. Where are you? It's such a beautiful view.
I'm in Panama at a friend's restaurant. We live in the country. We're on a farm about 8 kilometers out of town. But unfortunately, you can't get enough bandwidth there to support video. So we've come down to my mate's restaurant and we're just filming it, doing this right at the back of his restaurant.
Isn't that what life of Forex trader is all about?
Well, I call it living the laptop lifestyle.
Indeed. Even though, you know, I never personally understood all this taking the laptop to the beach and trade from the beach. I never felt comfortable with that. I mean, when I'm on the beach, I want to enjoy the beach.
Same here.
Right?
Yeah, exactly.
All right, enjoy that. I mean, everything is white here in Canada. We had a storm several days ago. It accumulated more than 50 centimeters in the high. So yeah, it's great for the kids though. So Peter, as I mentioned, you are absolute veteran in the trading world with so much experience, like more than 2 decades, right? To be accurate.
Bit over 23 years.
23 years. Oh.
September 1999.
I'm sure it's more than the years of some of the listeners live their life.
Yes. Yes,
Impressive.
I get that in some of the groups I'm with.
It's so impressive. Well done. I'm on my way to catch up with you in 8 more years or so. 7 years. Yeah, I'll be there. What really got you in trading? I mean, back then trading was absolutely different. It's nothing like what we know today. It was a different world. So what?
It was absolutely a different world. Online trading platforms were just starting to come into their own, or just starting to appear. Basically, I met some guys at the show at a show. I used to work with a franchising company in Australia, and I was doing trade shows in Melbourne, and met these guys there. Chatted to them, went and saw what they were doing, fell in love with the concept. So I joined their group as a student in September of 1999. Back in those days, courses were a lot more than they are now. That first course was $10,000, $9,995.
That's crazy.
Well, it depends. Fortunately, I loved it so much. I actually quit my job in March of 2000 and became their Queensland manager. So started marketing and promoting education in Queensland.
Was these the days when you had to call your company to execute your trade?
Yep. People today don't know how good they've got it. Back in those days, it was 2.5% each side. You had to make 5% just to cover your brokerage costs.
Wow. I'm sure most of the listeners would not be able to understand that. You know, I'm lucky enough still to catch this period because it started to switch somewhere in like 2005, 6, and forward. And where the platform started to be more and more popular, started to switch to like trading from home, right?
Yep.
But I'm lucky enough because when I started my journey, I was working for a broker, and my first job there was a dealer. So that's what I was doing. I was answering the calls, quoting
the
market, right? Like, here's a quote. 1, 2, 3, 4, 5 seconds. It's gone. I have a new quote for you, right?
Yep. Market keep moving.
The old good days. How was
Yep.
I'm very curious, how was the trading world in terms of the education available when you started? I mean, it's not like now, so many gurus, right?
Mate, it was the Wild West in those days. It was the real beginning of the widespread marketing of trading courses. Not much has changed since then, but apart from the pricing.
But maybe so for the good. I mean, you had the real books, what I call the real books. You know, the old school education that started to really teach you how to observe a market, how to deal with the market, and not like buy here, sell here. You know.
Yeah. Fortunately, I found one of the good groups with real and effective education. There are a lot of cowboys out there. There still are. You'll see it on all the groups on Telegram. There's lots of people just out there marketing, promoting stuff, and they don't really know what they're doing. And it's a trap for young players.
Would you say you are self-educated trader fully, or you were fortunate?
No. I've had two really good mentors, which I'll get onto a little bit later. But basically, I started with them. I took to it like a duck to water. Basically, I was practicing what I was learning 3 to 4 hours every night. It was an interesting time. I've done numerous courses over the years and had an extensive trading library before I left Australia. Give you an idea, the Edwards and McGee and the Bukowski encyclopedias were each around $350 when I bought them.
Wow. What a difference, right? Not like today's like audiobooks and books everywhere available, YouTube videos, whatsoever.
Yeah, download the PDFs, pirated PDFs and stuff. But as an author, I don't do that.
Yeah, that's true. You know what? I consider myself mostly as a self-educated because I didn't have back then the money. I was almost teenager when I started my journey, so I didn't have the money to invest in studies, and the money that my parents saved for me, that was for university. You know, my parents from Belarus. I mean,
yep.
For them, you have to go like and follow a very specific path, and I could not take this money, so I had to go through all that by myself. So I think would you say you are lucky enough to have the mentors in your trading life? It definitely would save you time.
They've definitely made a big difference. I mean, when I started, it was late 1999. So it was coming into the peak of the dot-com boom. Everything with dot or net in it was just skyrocketing. You know, what a ride. Coming into February, March 2000, I'm thinking, how easy is this and where's it been all my life? But then from March 2000, the dot-com boom was over and it became the dot-com crash. Fortunately, I had enough risk management training at that point in time to exit relatively close to the peak, and keep most of the profit that I'd made in that short period of time. I made hundreds of % profit in just 6 months, just writing .coms. It was all fluke. I didn't really know what to pick for an entry. I had no idea. It was going up. I'm buying it.
But you know what? It's better to have this fluke in your favor, right? Rather than blow up some money and then regret starting trading, right, and giving up.
Absolutely. Overall, from the fallout from the tech boom, took a long time of practicing, drilling, rehearsing techniques to become profitable in ordinary markets. Education was on equities. CFDs weren't available in Australia in those days, so we were doing weekly time frame on ASX 300 companies.
Forex was not that popular back then, right?
Forex wasn't that readily available. Forex only became popular when you had full access to online trading platforms.
Yeah,
that was a real commercialization of it.
That's what I mentioned. When I started with the broker 2006, and I remember the first days and the first platforms and everything. When it was so lagging and so annoying, so many bugs. I mean, it was crazy. And you know what? As someone who comes from inside, I saw all this manipulation that was available back then.
No manipulation. No, can't be.
No, right?
Tell me it isn't so. Tell me the markets are not rigged in any way, shape, or form.
And like, yeah, you know what? I don't know. I honestly think that starting studying and going through all that from the old days, it's such an advantage because today, I mean, recently I just started to do also some work for the Instagram and TikTok and try to catch up with the.
Mm-hmm.
I feel like decades behind when I watch what the guys are doing. I'm like, oh my god, where am I? Where are these guys? And but ridiculously, what they present, what they call education. I mean, like I'm watching it. I'm like, no, seriously, people really believe in that, right?
Mm.
Very unfortunate. Very unfortunate. When you see some candle and like some beautiful arrow going up, like, oh come on. Anyway, yeah, it's great. It's great to remember and thank you for that. How the market used to be back then.
Well, basically, when I started, you were dealing directly with a broker. Online platforms really hadn't got going in 1999. The education I received initially was basically mostly trend line breaks with confirmation, highly specific setups, divergent setups, and patterns. And that was what I was taught initially. For me, good mentors were a must. I had two. Rob Lennox, who was the initial educator, and I went on to work alongside Rob with the Australian College of Financial Education, and Leon Wilson, who I met in 2003, and he had actually written a book called The Business of Share Trading, and it was widely publicised. And he went on to write another two books. But Leon was a developmental trader, so he actually developed systems to work and adapt them, and that was where I learned a lot of the things that I'm doing today. Is through him. He aroused my interest in becoming a developmental trader, developing my own techniques based on observation and testing them, fine-tuning them, concentrating. He was concentrating on reversals, and I did a lot of work with continuation entries.
When I was doing my certification in the financial technician field, I was reading his book. His books are a part of the of all these list of many books, right? You have to study, you have to go through. So it's some amazing insight there.
Yeah, absolutely.
How long would you say did it take to you, or does it take usually for traders to really like understand how the market works and who works against whom, right? And because it's trading is never about buy here, sell here, candle breakout, whatsoever. You really need to understand the side, who is working, who are you trading against, how all that
Yeah,
how long did it take to you?
On equities markets, it's a lot easier than it is on Forex because you've got volume, and volume does help a lot. The problem with Forex is it's a decentralized market, so your individual brokers only show what volumes been traded on their platform, not on MT4, but on their brokerage.
True.
So that is a disadvantage for Forex, but you've also got to look at other parts of it. I mean, when I first started, we had to trade straight equities. There were no CFDs available in Australia in 99, 2000, 2003. No, they started in 2003. It was the first time we were able to have a more effective use of capital. You had to buy the shares. You couldn't put up a margin and basically use it like a margin loan. You had to actually have the cash to buy the shares. Now imagine doing that with two lots on a Forex on Euro USD. That's 200,000. That's 200,000 USDs you got to outlay.
I can't imagine that. I mean,
all right. So that was like what it was like when I started, and yeah, the brokers were charging 2.5% each side, and then they started. Then because more retail traders were getting involved in it, competition dictated that they came down to 1%. So 1% of the total buy value and 1% of the total sell value. You know, to make 2% just to break even.
that's crazy. I mean, But the moves were different also. I mean, it's not like today when the market is moving 0.5% or 1%, and it's like normal day. The moves were different.
Well, again, on equities markets, they do move differently to Forex. They're nowhere near as volatile.
Yeah.
In Forex, there is a lot of manipulation. You can see that.
Of course.
And again, it's a learn as you go thing. I look at 2015, January 2015, when the Swiss National Bank decoupled the franc from the euro.
Don't remind me these days. I made my mistake there. It cost me lots of money, these mistakes.
Well, yeah, I made a lot of money on that particular one. Because you're looking at
the money I lost.
My time machine doesn't work very well. So, but looking at the price action, the range of the bars was closing down, dramatically closing down. But the open interest on the futures contracts on the euro and the franc was skyrocketing. Incredible. That shouldn't have been happening. So something was going to happen. And it actually formed, I can't remember which pair it was now, it actually formed a descending pennant. So I went short on it 3 days before the announcement. So I went short on the Monday, and it happened on the Thursday.
Wow, that's a big advantage, isn't it?
And it just kept consolidating for Tuesday, Wednesday, and then Thursday when the announcement was made, bang, 2,300 pips straight down.
It was insane. But even on the Forex, I mean, yes, you're right. It's not as close as to equities and everything, but even on the Forex charts, I remember these days because there was some unregular noise with the way the price was moving and the levels that were cleaned back and forth. You can clearly see that something is building up. Of
Absolutely.
course, we all are smart after things happen, right?
Exactly.
But yeah, you know what? The mistakes we do are the best teachers in our life, right?
Only if we learn from them. Some people don't learn from their mistakes.
Absolutely. Absolutely. Most people are, repeating the mistakes, expecting different results, right?
Yep.
Yeah.
And it's attributed to Einstein that they keep on doing the same thing, expecting a different result is the definition of insanity.
Exactly.
Right.
That's one of the quotes I love of him. Yeah. With all the, all your journey here, were you at least once, I would say, close to giving up on trading, or it never went through you?
No, I was determined I was going to master it.
Sorry?
I was determined I was going to master it.
So such thought never went through your mind, right?
No.
Lucky you.
I
was close there several times.
Well, like I said, I was fortunate to have a good educator, a very good educator. I mean, I was the only one as a student that actually had his own phone number. Let's not forget, 1999 and 2000 were really before huge, big, expensive mobile phones.
Yeah.
And $7,500 for the Motorola briefcase.
Isn't that what we call VIP today?
And this goes back to the Stone Age.
And was he answering your calls?
Yes, he was actually.
Then he is a good mentor indeed.
The biggest single thing for me is risk management. As per the webinar I did for TAC in 2018, risk and trade management are the keys for me.
Yeah. Did you said you never had these thoughts of giving up, but did you blow up your accounts?
No, I didn't, but I did have a broker go down on me. Broker in Australia, CFD broker, $72 or $76 million of client funds was embezzled.
How was it like?
It wasn't recovered.
Sorry, it wasn't?
It wasn't recovered.
Oh, nothing. Money gone.
Yep.
Same happened with, you mentioned 2015 with the Swiss bank and everything. Same happened with many brokers there. And they started to chase their clients to cover up on the positions that they couldn't protect themselves, right? They couldn't hit the stop requested level.
Some did. FXCM got into trouble in 2008 with the GFC. They actually had to take an emergency loan. They borrowed $300 million off Leucadia in the United States to short-term fund them. But they were gone before 2015, before the decoupling. I mean, that's what you got to remember is that all the central banks are owned by the 21 prime brokerages. No, the 21 major banking groups. They own them, right? They own the central banks.
Right.
Therefore, these things are all advertised. These are all funded around the member groups of the central banks before anything is done. Otherwise, you would have seen huge massacres of the central bank positions, but it didn't happen. And it was the big boys and the 21 major prime brokers that were creating the volume of open interest on the futures contracts. Right, but FXCM went down in 2008 with the GFC. They weren't on the in list. They weren't a major prime broker, prime bank. They were just a Forex platform. They were the biggest in the world at the time. But then they couldn't afford to pay their loan, and then they got sold off to a European interest.
I didn't know this part.
And like I said, you'd only just started in those days. Remember, this was 2008, the end of 2007, 2008, the end of the GFC, and that was predictable.
I never knew that they switched hands, right, and moved to different ownership, I would say.
yeah. But you look at the run into what happened at the end of 2007, and it was predictable. Right, it was the longest bull run on all major markets since 1982 into 1987. Right, it was that was a 5-year run, 5.5-year run. Well, the run into the peak of 2007 was a 4.5-year run, and you just know that these things are not going to continue. And then you see the volatility that built in from about August of 2007. Look at the increased volatility in the stock pricing. It's just crazy stuff. Very predictable.
It is. I remember. I did not trade the indices back then, but I did short the euro dollar and the pound dollar, and I remember this discussion like it was yesterday. As I mentioned, I was working in the broker house back then, and then I had a short period for private capitals. And I remember when I went short there, my colleagues there, they would ready to kill me. Like, Vlad, are you crazy? You are going to blow up the money. You are going to destroy this account. But I insisted on my analysis, on my expectations, so it paid off. Sometimes you have to listen to your instincts and your own thoughts, right? Not anyone else.
And the other thing that you've got to look at is how historically, how long do these runs last for historically? 4.5 to 5 years is about it. 82 into 87 was a bit over 5 years, not much. It was only about 7 or 8 months difference between the length of the run between 80 into 87 and into 2007.
So what's your personal view on the current market conditions? I mean, the bull run since then was even crazier than it used to be in 2007, right?
Yeah, and it got really interesting in 2020 because of what happened when the world shut down.
Yeah.
So, but I mean, knowing and understanding that these runs can't continue, I actually developed a system of helping people to be able to protect their retirement savings using an index CFD on like the ASX 300, the S&P 500, etc. And it worked better than options because you didn't have to pay the premium up front. It's like having car insurance, paying for the insurance after the accident, but only paying for the year of the crash. So that was what. In fact, my first educator, Rob Lennox, he actually adopted that, took it on board, and he told me he walked away with nearly 90% of his peak value after the crash.
Unbelievable.
So he basically the index CFD, you've got to tune the size of the index position you're taking to cover the amount of capital you've got. And you can do it with retirement savings, you can do it with pension plans, You can hedge against the fall and then put that money back into the pension plan. You can do it inside. If it's got a self-managed plan, you can do that inside the plan. If you don't have a self-managed plan, if you've got a public offer one, you can do it outside the plan, and then put that profit into your pension plan. And that's what he did. So he walked away at that in March of 2009. He walked away with nearly 90% of his peak value. Now imagine how much that went up over the next 10 years.
Yeah. Well, 90%. I mean, it's insane.
Well, it's just a matter of understanding that these big runs can't continue. They are going to change direction. And look at how far they come down. Yeah. And then with that in mind, you look at it historically. You look at the S&P, the NASDAQ, ASX, Dow Jones. The pullbacks on these big long runs are significant. So you've got to find some way of protecting yourself.
So what do you think? 2023? Are we the beginning of a bear market, or it's not even close to it yet?
I haven't traded equities for several years now. I stopped trading them in 2016 and just concentrated on futures and Forex. But so I haven't really had a close look at the equities markets.
But with everything happening around the world, and with the rates, and with the pressure on the economy and the people, and the drop in retail sales all around the world, right?
Yeah.
I mean, it will have its impact. I mean,
it's going to have a very negative effect, and the cost of energy is a big factor as well.
Yes, absolutely. I had this discussion week or two ago with some guys that are in a very high role in the biggest tech companies here, and I told them, like, guys, they asked me, like, what do you think, like, the market is going to crash or not? I said, I don't know if the market is going to crash or not, but one thing for me, it's a warning sign. When you look at the job market, Google, Microsoft, Facebook, Amazon, you name it, everyone, they are firing tens of thousands of employees. Now, these guys, as you said, they have all their inner information. They are well connected to everything, politics, the financial system, everything. Would these guys, that the hiring process for them is so long, so costly, and so expensive, right? And would they really rush to get rid of so many people at once if they didn't anticipate something bad to happen? I don't think so.
Amazon just fired 18,000. That came out last week.
Yeah.
Some of the other indicators for me on that are the PMI, Purchasing Managers Index. In the US, that is down to 43. 43%.
The lowest since?
Lowest in 32 years.
Oof.
Real wages in the United States have been down every month consecutively for 21 months. Never happened before. The United States, Europe, and China are all in recession. That has never happened before.
So
I don't care what the administration says. The definition of a recession has been 2 negative quarters, consecutive negative quarters, and that's been the case for decades. Giving it a new name just to change the taste doesn't work properly.
There is a great saying that it has to get very bad before it gets very good again, right?
People have got to start hurting more before they're going to stand up.
Yeah, I think everything before COVID, at some point, I was looking around, and all the generation of my group of age, everyone is so they lost their gratitude, they lost their understanding, like, of be thankful for what you got, for everything. Like, they got used to that. For everything is good, everything is cheap, everything is accessible, every time, everywhere, wherever you want, whenever you want, wherever you go. And you know what? That's it. I mean, how can life be like that, right? It has to balance sometimes.
It has to. And I blame the education department, the education system for this. I was one of the last generations in Australia to go through school and be taught how to think, not what to think. And when you're taught how to think, you can figure stuff out. When you're taught what to think, you can't figure it out if it goes against you. And it seems to be an age of entitlement today as well. I didn't ask to come into the world, so it owes me a living, not the other way around. So that I think part of the issues, but overall, it's manipulation.
It is.
It's manipulation.
Professor Milton, he has amazing video on YouTube talking about all this inflation, how it's caused because of us, the people, because we want free education, we want free medical services, we want better transportations, less taxes, better roads, better. So we always demand for more, for better, for bigger, and we always vote for politicians who promise us that. And at some point, somebody has to pay for that, right?
Absolutely. Back after the 2007 election in Australia, we had a meeting with a guy who his father was deputy governor of the Reserve Bank, so he's no idiot. And his daughter, who's doing her master's degree at university, it took him 36 hours. Kevin Rudd promised a computer for every student. It took him 36 hours to convince her she wasn't going to get her own personal laptop to take home.
Oh.
And as soon as she woke up to that, she said, "Oh, if I'd have known that, I wouldn't have voted for him."
Unbelievable.
There are two very good books on the subject of education by John Taylor Gatto, Weapons of Mass Instruction and Dumbing Us Down. Very interesting read.
Which one is the second one?
Dumbing Us Down. And the first one is Weapons of Mass Instruction.
I didn't read it.
John was a teacher in New York for 30 years. He actually developed a system of teaching mathematics where it can take someone from first year high school to last year high school in 100 hours of tuition in mathematics.
I'll put them on my list to read.
Yeah.
Sounds like a must read. With all your experience, and I mean you are specialist in patterns, technical patterns, and risk management. You do something that I don't know to do. With all your add-ons, I watch you and I'm like, wow, it's impressive, really. Well done for that. What would you say your favorite trading style after all these years?
Continuation entries. The development of continuation entries. All right, the best run I had on that was, and I think I've showed you the chart. It's Pound New Zealand from April 2015. Price action only. Price action only. There were 12 entries in that run, and nearly 28,000 pips pulled out of the run between April and September. That's the development of that has been probably the biggest godsend for me. When we started, we were using trend line breaks with highly specific setups and confirmation, divergence as an early warning, but we were only taught to do one entry per run. And it just occurred to me over the years that, well, if we can figure out a way to have extra entries in the run, we can make more money out of each run. And continuation entries is just, to me, it's just one of the great things that I've been able to develop. You get something at the bottom at the actual directional change, and then have it run 4,000 pips, like the Pound New Zealand can do.
Also mastering the reversal. I see on your last I don't know, several years. The work I follow, the trades I follow, you really getting more and more and more accurate on the reversals. If it's with the candles reversals, if it's with the double bottoms, double tops. So catching up a trend as it starts is also an important.
Absolutely, but I don't just use price action. I've got to have confirmation as well. I don't just use raw price action.
Yeah.
All right. And under a highly specific setup for trend breaks, for example, the trend line and the MACD is confirmation, but you've only got a certain window of opportunity for reliability. Outside of that window, your probability goes back to below 50%. So knowing and understanding these sorts of things that have been developed over time. I mean, I have 16. I've now got 16 different entry structures. and 4 or 5 different stop management procedures. I used 3 in that webinar, the risk and trade management webinar, and that wasn't to brag about how many entries I can get in a run. It was how you can use different stop strategies in order to more effectively manage your positions as they're open and protect against pullbacks. And too many people I've seen over the years, they jam the stops in too tight. They've got this fear of missing out. But if you're going for a run on a trend, you've got to allow it to breathe. If you choke it, it'll die on you. Absolutely. Take your positions out too early.
And that's something I personally still work to polish on my side. I mean, when I go on long-term trades, I'm so good with everything happens. I don't care. But when I get involved in the shorter terms, I am more into the first signs against me, and I'm cashing out. So yeah,
that's why I spend a lot of time working on reversals and studying those, because frequently there's a different price action for a reversal than there is for a pullback. All right, the reversal has got to have a different structure in order to achieve reliability.
Agree.
So if I don't see that structure, I tend to hold the stop off and let the price action work. Sometimes it bites me, sometimes it doesn't.
There is no 100%.
No. Never. So
interesting.
Most people don't realize either with double tops and double bottoms and head and shoulders family that the entries are usually from the trend line breaks, not from the actual neckline break.
Right.
All right. And if you've been able to reduce risk, if you've been able to reduce risk off the trend line break, you can actually take the neckline break as a continuation entry.
What would you say? This is a question that I always wanted to ask a trader in your caliber. What were your worst, I would say, mistakes that you did in your trading journey? I mean, I'm very curious to hear that.
I had a definite fat finger incident. Unlike the one when they announced that someone typed a B instead of an M on an order and set the Dow down. That's crap, and we all know it. Because you've got to enter a physical number in. You can't type a word. So I was taking a short position on Brambles, which is an Australian company, and I shorted 27,821 CFDs. The order was placed as 279,821. I hit the 9 and the 8 at the same time.
When was it? In 2019, I think, or before, when there was one big trader. Remember, they did the same fat finger mistake, and the Dow Jones crashed like.
Yeah, well, that's what they said. They hit the B instead of the M. Well, if you have a look on the keyboard, there's another key in between the B and the M, but you don't type in a word. You've got to enter a number, which is an extra 3 zeros, not a B instead of an M. So that's all garbage. But anyway, the order executed on the Monday. I got a margin call. So I worked with the support team from the CFD provider, and we sold into every buy order that appeared. And in about an hour and a half, we sold down to the original order size. So that's the amount of the requirement of checking orders before posting, before hitting the enter key.
Absolutely. It's like check your email before you send an email, right?
Yeah, lots of spelling mistakes and stuff.
Yeah. Since I'm a kid, my father always taught me, always think before you say. Same about trading. Always check before you click, right? Buy or sell. Always check.
Well, we had a situation in Australia back, I think it was around 2004, as online trading platforms were just coming in. And someone, I'm trying to remember which company it was. It was a large Australian company. And he was looking to sell. He sold 50,000 shares. And he didn't check the sell price before he hit enter. And instead of selling them at 45, he sold them at 22. 50,000 shares.
Ouch.
And he must have been someone important, because the stock exchange reversed the trade, which they shouldn't have done.
Right.
You and I wouldn't get that treatment.
No. Now
But yeah, that actually happened. It might have been CSR. It was one of the big companies in Australia. But yeah, he sold them for $23 underneath what he wanted, what they were actually trading at, and he just didn't check the number before he hit enter.
Understood.
Who knows? He might have been rushing out the door and had to get it done and just hit enter and gone. See you later. The institutions soak that order up immediately.
Because the institution, that's what they do.
Well, yeah, as you know, the institutional screens have the orders on them. They would see that order come onto the market. First one in, best dressed.
That's crazy. I remember when I was applying for this private capital, it was for option trading, not Forex. They don't trade what we do, the retail Forex. They tested me for 3 days working on their simulator. And what you do is like a horse. When the horse is running, they close them. So all you do is just stick to some table, watching the orders. And when you see deviations, right, like big orders here and there, you must react instantly. Build your strategy, and that's what I was doing. And for 3 days. And because there were so better guys than me in terms of education, trading experience, everything. But I'm quick to respond, and I'm very good with all the numbers and with deviations to figure out all these things. And after that, when I started to work, I saw that happening like crazy. This, as you say, you get a number, boom, all the radars, all the alarms, everything is like attack, right? It's like, it's crazy. It's crazy how it works from inside, and nowadays it's even more advanced than it used to be. It's insane.
It's a high pressure environment.
Yeah, definitely not for everyone. Absolutely not.
No.
Retail trading is different though, but the professional trading level, on the highest level, it's the pressure unbelievable. And many times people ask me, like, Vlad, why did you exit this world? I said, because I don't like the pressure.
I was going to say with a young family, the stress would be enormous, and would take a big toll on your family life.
Absolutely, and that's the thing. I mean, yes, the money is better. Absolutely, it's like crazy. You can get the crazy income there, but does that mean that's it? You lose your life. You are absolutely committed. Everyone is always here, like breathing on your neck, like, always pressure, always. I don't know. It's not for everyone. Absolutely not for everyone.
No, the time is worth more than the money. Absolutely. You can always make more money. You cannot make more time.
Absolutely, 100% agree with you. Well said, Peter. What would you know? What would you wish to know before you started trading?
You mean it, apart from everything I've learned over the last 23 years?
Yeah.
The learning process is what cements everything into place. It would have been nice to have had access to this knowledge 10 to 15 years earlier, but well, it's frequently said, when the student's ready, the master will appear.
Would you change anything in the journey you went through?
Knowing what I know now, probably a few things, but not that I could have determined at the time. All right.
That's great to hear.
No, it's really, it's the educational process starting 10 to 15 years earlier, but we didn't have the tools that we had when I first started. We at least had a computerized charting program. But one thing I do teach all my students is get some graph paper, get a big table, and go and do some hand charting.
Yep.
You'll develop a feel that you will never otherwise develop.
Yep.
And work on a longer time frame and adjust it to each of the smaller ones. So if you're working on equities weekly, adjust it every day. So you might have to put a new higher high. Definitely, probably got to put a different close in. Get rid of the yesterday's close and put a different close in. You may have to increase the range of the bar, just depending on how things are going. But doing it by hand, you do develop a feel that you'll never otherwise attain. You don't have to do it for 3 to 6 months. Some people who have done it have come back to me and said, "You're absolutely correct. I didn't believe you to start with."
Peter, I think we lost you for a moment.
I'm back again. The main thing is that the learning process is what cements everything into place. without going through that, you don't develop the feel. You don't develop the feel that I've got now, and the revert. A lot of the continuation formations and reversal formations that I work with are a direct result of having to go through that educational process.
We all get smarter when we are older, right? I think it was Lev Tolstoy who said one of the traumatic things in life, it's we are getting too smart too late. Right?
It was Oscar Wilde who said that life would be eminently more enjoyable if it could be born at 80 and progress slowly towards 18.
Yes. That's absolutely well said. Peter, you are mastering all these. I would say the most important thing in trading, the risk management, risk and money management, because trader who lacks the knowledge and the experience on the charts can still make money if he manages the money properly. But trader who lacks the understanding of the risk management and money management, but knows everything about chart, would never be able to make money. So, what would be your top 5 or so inputs, insights, suggestions, recommendations to the listeners about the risk management? How important is that, and what should they focus on?
Well, risk management was drilled into me by Robert Lennox, who was my first mentor. And pardon the expression, but I'm anal about it. As we covered in that webinar that's on the tax site, on the it's now HTC site. Develop several strategies for risk and profit and position management. I use 4 different exit strategies, which are all different structures, and whichever keeps me closest to price action, taking into account I've got to allow for pullbacks. Risk and position management is vital to overall success. Right, but also developing continuation entry structures. I've seen numerous traders who've turned their results around by adopting multiple good risk and profit management tools.
Would you agree with me that there is no such thing a perfect strategy that will work on all the market conditions, and there is no one way to manage your money in all market conditions?
No, you've got to be able to be adaptable. And a classic example is patterns. Coming in late 2018, early 2019, I noticed that I was getting entered into them and then stopped out of them on a much higher frequency. And I went back and just had a look at everything I could find on them over the previous 18 months, and the market had changed. What we've got to remember is it doesn't matter what we do, the big boys know the basics of those same techniques.
Absolutely.
And what I found was, and I made the determination, and the adaptation that I made has got me more reliable again with them. And that was, they all know that, for example, on a flag, entry goes market noise above your upper momentum level, and the stop goes at the lowest value inside the formation. Well, now I've shifted the stop to market noise below that lowest value now, and I don't get taken out anywhere near as frequently. You can see the entry get taken in, the price driven down, take the stop out, and they've got the liquidity they want. Yeah, and don't take it personally. They're not hunting you and me. They're hunting other institutional traders because they're the ones that have got the liquidity.
It's a jungle.
It is. But basically my attitude is that let them lay the ground rules and then you just play the game. Let them show you where they're going to move it and then you jump on for the ride. Don't try and be the move maker.
The smartest guys, you know what will remind me? There are many times, when you go to the casino, there are all these older ladies standing behind the machines, waiting for you to lose all your money and leave the machine, and then they jump on the machine.
And jump on and pick the jackpots.
Right? So when you know these things and you are aware of all that, it's trading becomes different. Absolutely.
Yeah, absolutely.
Peter, as I mentioned at the beginning, you are the author of what for me is one of the best books on the subject, How to Trade with a Technical Pattern the Correct Way. I must admit, I learned there are things that I did not learn from any of the books I had to read to get my certification. So thank you for that, first of all, and for all the listeners who would like to get the book, below this video you can find a direct link. Much recommended book. what? First of all, what triggered you to write this book and to share them? It's a long book. It's a lot of work and effort you put into that. What triggered you to go for such a move? And how long would you say, did it cook in your head to reach this level where you feel absolutely comfortable and convenient to share it with everyone?
Well, the main motivation was there was nothing really effective on the market. Even the Bukowski and Edwards and McGee encyclopedias, they didn't show you anything apart from the formation. They showed you nothing about how to identify the entry. They showed you nothing about confirming the formation. All right, so you've got the formation starts. You've got to be able to identify it as it's forming. Then you've got to be able to give a confirmation on it to give you a higher probability. And then, okay, how do I take the entry? Do I take straight break of the line? I've got to close past the line. Or I was originally taught to use the concept of market noise, where you're creating a buffer zone where price has to reach to get to your entry. If it has to reach to get to you, there's a higher probability of continuation. So that was the basis of what I did and the development work I did on them. And because it took me so long to actually get hold of it, I mean, I couldn't do it. I couldn't spot them. I couldn't see them falling. And Rob said, well, get a constellation chart and go out in the night sky and pick the constellations. I couldn't even spot those damn things with a road map. So it took me a long time to actually really be able to work with them. But all of a sudden, they just started jumping off the screen saying, pick me, pick me. And I thought, well, it's all about helping other people. You don't write a book like that to get rich. Trust me. Especially in these days of books where online books are only $30 and $40. If you could sell it for 150, maybe, but you still got to sell a lot of books.
I hear you very, very well and loud. I mean, many times people ask me like, Vlad, why if you trade, why do you need your club and everything, right? Like, and many of these guys claim like, Vlad, you're doing it only for money. Really? I mean,
really?
$37 a month or 370 a year. Am I going to be the multi-billionaire? You think? Come on.
No. No, you don't write books like this to make money. You don't run a club like what you're running to make money. Your overheads are a big part of your revenue. No, it was basically to help people. I've had people pick that book up, go through the book. Stoyan, there's one. He picked the book up and he's learnt more about patterns in a few short months with that book than he learnt in 2 or 3 years before that. So I know all the extra help and all the extra support I got when I first started. It's a way of paying it back.
Yep.
Helping other people.
And I don't know if you can relate to what I'm going to say, but for me personally, my personality is I love to gamble. That's my problem, right? If I don't have the discipline or something that keeps me very well in four walls, I will always find a way to go aggressive and risk some money and try something crazy. That's my personality. So running a club and being responsible and 100% transparent with everything I do helps me trade like on the highest level I ever imagined. So
yeah, well, basically you've got to be there every day.
Exactly, and you have to stand behind what you show, what you say, what you trade every day. So there is no left or right. And you know what? I can say I grew up. I became more mature in trading thanks to the club, thanks to the commitment. So I'm sure this book also contributed you in your trading.
And it's also commonly said that the teacher learns more than the student out of the lesson.
Absolutely. Absolutely agree with you. It's a great saying.
I mean, I started that book. I was actually there's a couple of brokerages in Australia that one of the guys I knew very well, and he saw what I was doing with patterns, and the original version of the book was nowhere near as detailed as the second edition rewrite that was completed in 2018. Excuse me. But they got me to write it, and they actually distributed it to their client base for anyone who was interested, and that helped a lot of people. It also helped them make more trades, and therefore the brokerages made more money. But And that was the whole concept of it.
Are there any more books coming?
Yes, actually, I'm working on a book on trading plan, based on that trading plan template that I sent to you.
Looking forward to read this one.
Yeah.
That you have so many of your real trades examples there, like taking it every step, every thought you had with the trade. You are sharing the experience.
Yep.
I think it's brilliant.
Well, things like risk management on that. I mean, I go down to broker risk. How many people think of broker risk? What's going to happen? How are you going to manage that risk?
Yeah.
You know, how a broker go basically went, well, they went broke, they folded, they went out because most of the money was embezzled out of the platform. You know, how do you protect against that? You've got to have a way to do it. You know, most people don't look at systemic risk.
Yeah.
Like the meltdown at the end of 2007. Well, it was predictable. You could see it was going to happen. The volume on the Forex platforms I find is almost useless, but I use the volume on the currency futures contracts as a guide. You know, it's these sorts of things that can help give you an upper edge. That template was put together by myself for myself, and when you first started, you'd have heard it. You've got to have a proper back-tested trading plan. Well, no one could tell me what's supposed to be in the trading plan. How do I put it together? What's the order? Right. So it was all the development over 10 or 12 years to get it anywhere near where it is at the moment. And, you know, so basically it's going to be a very in-depth, detailed example. And it's going to actually have examples pictured in the book as well of what we're talking about should look like. Start looking. Like I said,
amazing read.
If you've ever had a platform go down on you and you lose all your money on it, well, you've got to rethink things. You know, I was once told by someone, if you don't think outside the box, you're not thinking. You are rearranging existing prejudices. So everything I look at now, I look at, well, what can go wrong? Where can it go wrong? How can it go wrong? How can I mitigate the risk? Right, that's my thinking process.
I think this is the highest level you can reach. I was reading a book of Daniel Negreanu. It's about poker, right? One of the guys I personally admire. I think he's brilliant personality and also brain in poker, how he looks and everything. And he said there also that first of all you learn the technique, right, and the cards, what's strongness, and then you learn the hands and your chances, probabilities, and so on. But on the highest level, you are basically learning how your opponent thinks, right? And when you are able to get into his mind, how he thinks, you know where are these buttons to press on. To optimize and maximize your results, your performance, and your success. Same with trading. At the moment you figure out how the other guys are working, where are the clearances, how does it look like, where is the white off, and where is all this price behavior, then everything starts to look like in a sort of different light, right?
Absolutely. Yeah, for me, the most important thing was learning to read price actions, understanding levels, understanding trend lines. I mean, I was originally taught that trend line is basically the boundary of sentiment.
Yeah.
All right. So you don't need to have the highly specific entry structure requirement for a trend line to be able to develop it. In fact, when one of the articles that I wrote that you've got on the website somewhere, I actually mentioned that the trend lines are a boundary of sentiment, and if applied properly. But there's a lots of traps for young players in this industry, as with anything. For me, good education and support groups that can help you develop are a must. I mean, I've been involved with TAC, now HTC, since I think it was 2016. And I've often said it's the best group of its kind I've seen. There are other great groups out there, but they are few and far between. And you've got to know what you're doing to be able to find the good ones from the bad ones.
Thank you very much for that. Yeah, it's been a journey.
I mean, so the support you get on what was tech, I still have a hard time calling it HTC. It's encouraging. It's encouraging to see people with that sort of levels of support in their groups out there. I'm a member of some other good ones, but the tech is the best of its kind I've seen. And I've been with you. I think it's 2016, or it could have been 2017.
And I appreciate every single year and every single month and day of this period. We all learn so much from everything you contribute to the channel.
Yeah.
So thank you for that, Peter. Before we're done, here is a very important one, because I'm sure that many of the listeners would be pretty much, the beginning of their journey, sitting and listening to a veteran in trading, 23 years. That's, it's significant. It's something that I'm sure they can learn a lot. What would be your best suggestions, tips for those who are about to start the journey and have no clue where are they stepping in?
Find good education and good support groups. All right, good mentors are a big bonus. A lot of people think education is expensive. Well, if you think education is expensive, you haven't factored in the cost of ignorance.
That's a great quote. Yeah, that's a great.
Actually, it was. If you think education is expensive, you haven't factored in the true cost of ignorance. Because it's not just the mistakes you make; it's the time taken to be able to be on the operational side, and it's that lost time that you can't replace anymore.
Absolutely.
Yeah.
Absolutely. Money costs much more than anything else you would ever invest in.
Yeah. Good books on the subject. There are issues with some of the books, though, especially some of the publishers. Right Publishers is one of the worst offenders. Leon's first two books have got everything that he put into the manuscripts.
Mm.
And that was an Australian publishing company, but they then got bought by Right Books out of the US. And in his third book, they cut 25% out of the book because they didn't understand it. And that was what the book was about, was the system of development that he'd done. They didn't understand it, so they cut it out.
It's amazing.
Yeah. And one of Leon's favorite sayings, if you don't want to devote the time to learning to be proficient, just send me all your money, because I'm going to get it anyway, and at least I'll send you a postcard so you can see how I'm enjoying it.
That's a good one.
But yeah, so books you got to be careful with. That was Alexander's Elders' first book, was a major issue. Walk into my trading room, no one could make the system work. And after Leon's book got cut up like that, we figured that, we know Elders made a lot of money out of that system, and that's probably why, because the editors cut vital information out of the book. So, but yeah, good education, good mentors, and just get on your way so much better, so much earlier.
Yeah. The best, the best way to get things done is simply to start, right?
Well, you've got to start, and you've got to start somewhere, but you've also got to get some knowledge very quickly. Yeah. And experience might be a good teacher, but it also can be a dangerous teacher.
Absolutely. But knowledge you can gain quick, right? Experience.
Yes.
No. You have to give it the time. You have to go through all the different market phases. You have to let the market slap you several times.
Oh yeah.
Yeah.
But again, good risk management there, and you don't get hit too hard.
Absolutely. When I was training boxing for a short time, I remember my coach always. He was telling me, before you hit, learn how not to get hit, right? How not to get knocked out. Move.
Learn to evade before you learn to strike.
Yeah, exactly. So it's same exactly in trading. Learn how to survive, how not to lose your money before you make money. It's
my favorite ninjutsu instructor had a saying: if you failed to block effectively and he landed anything on you and you issued any sound, it was shut up, princess.
That's good.
That's learn to evade, learn to block or evade.
Exactly.
I mean, that was a good education for me. It was a great education in self-discipline, martial arts.
Peter, I really want to thank you for joining in this podcast. It's been an honor. I enjoyed it a lot, so I hope you enjoyed as well. I also enjoyed the view behind you. I mean, when I look right, I look left, I see all the snow, and here I look at the sun. So that's how sun looks like, right?
It's a little overcast at the moment, but it's bright day out here. But I was born in in the southern Australia, and as Janice puts it, she was born in Sydney. Every time we've moved, we got closer to the equator. Now we're only 8.5 degrees from it.
I hear you. Yeah, well.
We moved away from the cold.
For me, it's the same line like Toronto. So, yeah, we're back.
Look, it's been fun. Been a good experience. I thoroughly enjoyed it. Happy to jump on again if you want to do another podcast.
Much appreciated your time, and will be very big honor to run it once again.
Yep, sounds like a plan.
Once again, thank you guys for listening, and for all those who wants to talk to Peter. I'm honored to say that he's with us in Home Trader Club in the chat. So if you're not in yet, join us in Home Trader Club. And thank you once again for your time. Best to you and yours, Peter. Best to you. And Johnny, say hi.
Yeah? Will do.
Enjoy the weather. And we'll speak soon.
Best to you and your family.
Thank you very much, sir. Thank you.
Have a great day.
Have a wonderful day.
Bye.